Welcome one, welcome all to the latest edition of my series of webinars at Epic Street. As always, one of the first things I do is actually literally the first thing I do besides read the early part of the Fibonacci sequence is thank the fine folks at Epic Street. Thank you very much for giving me the opportunity to conduct these webinars. I do them 4 days a week currently, typically London close, about an hour after London close on Monday, Tuesday, and Wednesday. Then I do one at 8 p.m. New York time Thursday evening. That would be the Asian Open for many of you on Friday. So just after London close, Monday, Tuesday, and Wednesday, Asian Open on Friday, 4 times a week, and love it. Love the chance to converse with other traders. In fact, I go back to Dee's comment earlier. I've been saying that in my live coaching session at Epic's Boot Camp for, I bet, really ever since I started coaching. I've mentioned it from time to time here in these Epic Street webinars as well. I mean, I still find it just incredibly cool to be able to converse with traders from around the world, and not just because it's I don't know about you, but actually I want to show of hands here. By the way, don't literally raise your hand. I want to show of typed letters, yeses or something. Is it just, it can't be just me. Does anyone else have a great deal of difficulty finding someone to converse with, someone to chat with when it comes to trading Forex? I mean someone like near you, someone that lives near you, either in your household or neighbors or someone in your town or city. I mean, it can't just be me. I live in a Midwestern U.S. metropolitan city named Indianapolis, and it's got more than a million people. But I'm telling you, even folks that I've worked with for a long time, people that I respect, local business leaders and such that I've worked with in the past, either they've been a client of mine or I've worked for them as an employee or whatever. I connect with them every once in a while and or just happen to bump into them at a Starbucks or something like that. And I mention the currency markets, and just a total glaze goes over their eyes. It's just like they look at you like you're a Martian, like you're a like maybe you're from Jupiter in my case, because I'm a quant. So I not only talk about the currency markets, but I talk about the quant type stuff, which suffice it to say, it's not just you, and that's not just you. And by the way, that's another reason why we have to credit Epic Street for building these for conducting these webinars and bringing people together to talk about this, because it's it's hard to find this sort of thing in your own backyard. You don't have people gathering at little, in like, say, back rooms of churches talking about foreign exchange, although that may be the case in some places. But anyway, it's always a thrill for me to chat like this with traders or wannabe traders from around the world, and I always enjoy doing these webinars. So anyway, thanks to FX Street. Let me start with a bit of an informal disclaimer. This is not an alert service. I'm not going to give specific trade alerts during this session. It's purely educational. We're going to take a look back at price action over today's European and especially New York morning sessions. And then we're going to take a look ahead at what things like scheduled news reports, not just for tomorrow, which would be Tuesday, but for the rest of this week. Might even mention a couple of things coming up the week after this, in terms of things that news events, either scheduled news events like economic reports, or maybe some stuff that hasn't been scheduled, but things that are coming up that could be market movers for the currency market. Anyway, let's get started. Well, one of the things I've said for weeks now, and I'm sure many of you are in tune with it on your own, regardless of whether you heard me say it or not, is I've been saying, how many times have I said this in my New York session with reviews, in my live coaching session at Epic's Boot Camp? Watch Europe. Watch Europe. Watch Europe. I mean, price action, not just in currencies, but in multiple financial markets since arguably, even going back to parts of July, Europe has been such a key driver for the markets, folks. Not just the euro and the currency markets in general, but for many multiple financial markets. So it behooves us to keep an eye on what's happening in Europe. And since Europe has been and the concerns about Europe since it's been such a key driver of multiple financial markets, I admit I myself have tended to gravitate a lot more to euro-related pairs. And you know what? If you look at the pair like the euro USD, you're like, why not? Why not? The euro is moving. It does move fairly well. It does move fairly technically. It is the most liquid, the most heavily traded currency pair on the planet. I mean, what's not to like there? Now, I'm not knocking those who, for example, in my live coaching session today, we had some questions about, set up on the Aussie USD, that currency pair, some talk about the British pound as well. Nothing wrong with those pairs. They're in fact tradable as well. But given the choice, unless there's something, at least in my mind, as I review multiple currency pairs at the start of my coaching sessions at around 6 a.m. New York time, and especially as we approach the U.S. Equity Market Open around 9:30 a.m. New York time, unless there's something unique with regards to some certain base currencies, like unless we see some unique strength or weakness in the Australian dollar, unique strength or weakness in the British pound, things like that, unless I see something like that, I tend to gravitate these days to the euro pairs. Yeah, I know. By the way, Anise, and I'm loving that too. I don't know, but I'm in that trade. So let me cue up my. You should see my cursor now. Sorry, you couldn't see my cursor earlier. Let me discuss one of the euro setups we covered today in the live class at FX Bootcamp. I'm going to expand this chart for the euro. I'm going to show you a 15-minute chart without indicators. Trendline power, Michael. That's well. Hey, Michael, I'm going to steal that and call it my own. I love that trendline power. Yeah, by now you should probably see the trend line you should see the trend line I think Michael's talking about. The trend line I think Michael's talking about. I'm showing a 15-minute chart without indicators. I guess I could show this on an hourly chart, but I thought the 15-minute chart told the story pretty well. You should see what it's actually. Let me click on these red arrows so they can stand out a little more in this chart. You should see a series of 3 red arrows with red boxes around them. Those red arrows point to from left to right, and I may be off by a few hours on this, but I believe the swing high near my cursor right now, the swing high in the upper left-hand portion of this 15-minute chart, I believe that's the last Friday's early Asian session high. So that's actually officially Friday's high, but the early Asian session high from last Friday was established there. Then you have last Friday's New York morning high right here in the 50-ish zone. And then you have today's early Asian session high. So if you connect those with the dark orange trend line, as I've done here, and extend it forward in time, where we found the euro during the hour before the New York session open. I'm recognizing New York session open as 8 a.m. New York time. Some of you may have a different definition. That's a pretty classic definition of the open or start of the New York session, the New York morning session, 8 a.m. New York time. During the hour or so before the New York session opened, you had the euro stalled at that orange trend line. And simply put, that was the case for the short. That was the case for short. I mean, think about it. In the context of what's been a broad euro downtrend, the euro dropping more than rising, this entire month, really. The euro dropping more than rising this entire month. You can decide. You could have decided really ever since the euro selling pressure on the euro accelerated in the early part of this month. You could have decided that you as a trader may seek only major opportunities to short the euro. End of story, pure and simple. I've talked from time to time in my live coaching session. I believe last Thursday's New York session video review, for example, covered a long on a euro yen. I mean, those opportunities will come in the context of a downtrend to take a counter trend long in that case. But by and large, if you want to be keep it simple and stay conservative, what you can do is have a bias of seeking to trade only in one direction. And in the context of all the concerns about the European sovereign debt situation, and in the context of the major sell-off since the latter part of August, early part of this month, and you may have sought only to sell the euro, and that was a reasonable place to do so. Now, what I haven't mentioned, I actually didn't even mention this in the live class, but I suppose you could have made a complementary case, if you will, for this green trend line based on the New York morning low on Friday. Actually, that might have been the Asian session low on Friday. I don't have this chart shaded, so I lose track of my days here. So it might have been early Asian session, or maybe London session low on Friday, with a higher low established, I believe, in the New York afternoon. But anyway, that might have been a complementary sort of trend line converging with the orange trend line. But even if you didn't see that, the main case here, as I saw for the short, was the orange trend line connecting the highs going back to the early Asian session high from last Friday. Pure and simple. Now, I don't know how many of you recall me talking about this. Well, actually, you know what? Maybe I didn't talk about this. I'm already starting to confuse my the comments I make in my live coaching session, the comments I make in these FX Street webinars. So I apologize for the confusion there, but I know I mentioned it in my New York session video review for last Friday. I believe it was last Thursday. Yeah, last Friday. In my New York session video review for last Friday, I talked about the 3430 area on the euro. And if you go to a daily chart for this pair, let me get the I'm going to turn off the auto scroll here. You should see a horizontal blue line in this chart at 3430. Actually, you see two lines, but they're so mushed together. The horizontal blue line, you can just make out a horizontal blue line. That blue line is at 3430, 1.3430 for the euro. And we had several highs for the day established on the Euro USD during the month of December of last year. Those highs all within about 10 pips of the 1.3430 level. Also worth noting that I believe there was at least one high established in early January within the 10 pips of 3430, and the February low for this pair also established within about 10 pips of 3430. So the 3430 zone was important late last year and earlier this year. So going back to the 15-minute chart, I was afraid this would happen. Got to get this chart back in line here. There we go. Auto scroll back on. So we know that 3430 area was important late last year and earlier this year, and it seemed to define Friday's lows, the 3420 to 30 area. Well, given all of that, you had a case for taking taking profit on that short, the short taken at or near the orange trend line, taking profit in the 3420 to 3430 zone. Now, some of you may say, well, why not let it run? Why not let it run? Well, that's a distinct possibility. You could just say lock in some profit, maybe 15, 20 pips, what have you, and let it run and wait till you get knocked out. On a Monday, especially Monday without any major news, it's my preference to take profit where a logical profit target is reached. It's my standard operating procedure, if you will, for a Monday is not to expect much of a trending market, not to expect any move to extend a great deal. Let me explain why. I've got a spreadsheet that I put together earlier today, and it's this kind of study I've done in the past, but I just revamped the study. I redid the study based on analysis of Euro USD price action going back 1 year. I looked at 1 year's worth of price action on daily candles for the Euro USD through last Friday. Let me show you what I've got here. What I've done here is I've looked at volatility by day a week. You should see. Someone please confirm you see a chart, a graphic over you. Actually, a graphic over my MT4 charts. You should see some gray vertical bars and some thinner black horizontal lines. Thank you, Michael. Let me explain what these are. The black horizontal bars are kind of thin. I know. I probably should have tweaked it to make them easier to stand out. But the black horizontal lines, those represent the average range from high to low. The average daily range, that is, from high to low on the Euro USD by day week. So, for example, on Monday, I've looked at all the Mondays going back about a year. 1 year from last Friday, what was September 23rd, right? So I looked at all the Mondays going back for a year, 52 weeks. And I found that on average, Mondays on the Euro USD, the average range, the high minus low for the day on a Monday, about 150 pips for the euro, about 150 pips. By comparison, it's about 160 for Tuesday, a little below 160 for Wednesday. It goes up to about 165 on Thursday, and back to actually more like, it's about right, 165, and just over 160 on Friday. And here's my point. The Monday tends to be the lower volatility day of the week, not just for the euro, but actually for many currency pairs. I'm using the euro as a proxy for the broader currency market. So again, it's very common for Mondays to be just less volatile trading days, pure and simple. Now, why is that? Well, part of the reason is usually Monday features little to no major news flow. You just don't see a lot of news reports come on Monday. News flow is rather light, and also, another reason relates to some extent the volatility you see at the end of the week. The end of the week can see larger than normal volatility, and if you think about price action, regardless of when it occurs, after big moves, if and when they do occur, you sometimes see consolidation. More limited, lower volatility, sort of range on price action. So on weeks when we got like a big move on a Thursday or Friday, or maybe both, you'll see sometimes consolidation, more lower volatility, kind of range-bound price action on like a Monday. Yeah, they're kind of like dojis, and I should explain the vertical gray bar, but that's the 9 to 5% confidence interval for the mean of the range in the average range in each case. So, for example, from a quant perspective, from a statistician's perspective, these ranges aren't statistically different. These ranges are not statistically different in terms of. I'll just leave it at that. They're not statistically different, but it's something that I have noticed that Monday, even from a nominal average perspective, does tend to be the lowest volatility day of the week. So to satisfy any of you who are statistically inclined out there, who have a bit of a quant background, I wanted to show the 95% confidence interval for the mean for each day of the week there. But just as a note that they are not statistically different. However, one can at least reasonably assume that you're going to have more often than not, you have a fairly tame Monday compared to the other trading days in the week. And also if you look back at the euro and look back at price action, ever since that sell-off that we saw here, where the drop on the euro after the FOMC statement released last Wednesday afternoon in New York time, ever since then we seem to be sort of range bound here, and maybe not so much range in terms of horizontal range, but maybe there's a case, if I move my lines a little bit, you could probably make a case for some sort of horizontal support closer to, 3380, 3390 maybe, and maybe resistance is this orange trend line here. So in the context of recent price action last Thursday, last Friday, it wasn't crazy to assume that any volatility we saw on the euro today would be rather limited, unless we had some sort of new major news flow, which I really didn't see. Actually, there were some comments by Lorenzo Bini-Schmaghi, a key member of the governing council at the ECB, the European Central Bank. He made some references earlier today during the New York morning session that the ECB might be considering ways to more fully leverage the EFSF, the rescue fund in Europe. But this is all, conjecture at this point, and to put it another way, the market certainly hasn't moved that much in response to Bini-Schmaghi's comments. So you can argue the market's in sort of a wait-and-see mode when it comes to events in Europe. Yeah, Nise, I see your comment about news trades. Nise, I will tell you, I don't know, maybe you've seen something different than I have, but I have found it increasingly difficult to look for news trades per se. A classic news trade is a situation where a standard economic news report that may come out every month, for example. A lot of economic news reports from various countries are monthly in frequency. And you get a news report that comes out, especially during like a New York morning session, that prints a number that's much greater or much lower than expected. And you get a corresponding move in the currency market, whether it's on the Euro USD or other major currency pairs. I have this isn't the first time I've said this in one of these Epic Street webinars, but I just have not seen many responses to many so-called news trades. No, I haven't seen many good news trade setups. It just hasn't happened. Again, that's probably a reflection of how much the market's been focused, I would guess, on Europe. And of course, when you can look at the focus on Europe, and unfortunately for some, I say unfortunately because it's so difficult to decipher it sometimes. But unfortunately, when the focus being on Europe, specifically the focus is on politics in Europe, and you might say to some extent the focus is on politics even here in the U.S. as well. And I don't know about you, but politics, boy, that's a tricky one to decipher. That's a tricky one to predict, where we're going to go from here. Yeah, like Wednesday oil towers in terms of the old classic news trades that have kind of gone away. Yeah, we used to be able to trade the Canadian dollar in response to the weekly oil inventories report, but no mas, no more. So, folks, that was one of the major trades I saw on the euro today. Going back to the 15-minute chart without indicators, and actually you could take it both ways here. You could have taken the short around the orange trend line just before the open of the New York morning session, taking profits somewhere around 34.20. Let me get that gray line back to around 34.20. Could have taken profits somewhere in that 34.20, 34.30 zone. And likewise, you could have, or maybe you were only given in the context of the earlier London session rally, you might have been looking for a long, and that was a reasonable long, 34.20, 34.30ish. And you take profit on the long around that orange line and be done with it, or maybe around London close, you take a short around that 35.25 zone. It could be still riding that. I'm going to move on unless there's any other questions about either this pair or if you want to look at any other currency pairs. But I think this is pretty indicative of what we saw in the currency markets. We did see some bronze yen weakness early on, but that sort of fizzled as the day wore on. See the yen crosses here. The good news about the yen crosses these days, I will say this. The good news about the yen cross these days, we've seen at least some better correlation between these pairs. There have been many times this year when the yens were just not moving in lockstep with each other. And I don't know about you, but I personally don't care to trade the yen crosses when they're not moving in lockstep. When the Japanese yen essentially is not in control of these pairs, I prefer not to trade them. Now, sometimes it's okay. If you have a rather neutral Japanese yen, but you're seeking a way, for example, to trade maybe a uniquely strong British pound or a uniquely weak Canadian dollar, for example. I mean, trading the pound or the Canadian dollar, for example, against a seemingly weak, seemingly neutral Japanese yen. I mean, that's a viable way to trade some of those pairs, because we have some days, for example, we've had some days, I should say, that earlier this year where, maybe the British pound was strong for some reason. Maybe we had some good news out of the UK. Maybe there was some hawkish commentary from a Bank of England member, whatever. Maybe the British pound is strong, but yet, on the same day, you also have evidence of strength in the dollar for whatever reason. Now, that's a bad combination to try to trade, a tough combination to try to trade, a strong British pound, strong U.S. dollar. On sessions like that, or days like that, if you believe for whatever reason that we might see sustained British pound strength, maybe pair up the British pound against another currency, and sometimes the best thing to do is to find a currency like a yen, which is maybe neutral on the day, isn't doing much, and trade. Do more of a pure play British pound trade based by pairing it against a currency that's relatively neutral. Well, from here, this is probably a good time to talk about now what. Now what? What next? I did see a post a little while ago by one of my news feeds, Trade the News. It looks like there's at least a conference call or some sort of a communication between German Chancellor Merkel and the Prime Minister in Greece. That's tomorrow. that might affect the financial markets, not just currencies, not just the euro, but that might affect the financial markets tomorrow. But as I see it right now, at first glance, the key news events this week, again, just kind of keeping with that euro theme, or that Europe theme, I should say, the key news events this week, over and above anything listed on FX Street's calendar, for example, could be Thursday. I would say Thursday likely to be a key day for Europe, at least for the euro specifically, but even for broadly speaking, the financial markets, for at least a couple of reasons. Number one, and I believe I mentioned this late last week in one of these FX Street webinars, there is an Italian bond auction coming up on Thursday. As I recall, an auction in Italy of longer-term government bonds, not just like short-term bills, but longer-term government bonds. That could be a good gauge for sentiment, either for or against Italian government debt. And I don't think we haven't seen one lately, as I recall. But if we do see what's called a failed bond auction, if there's a failed Italian bond auction, that could definitely shake up the euro. And likewise, if the bond auction goes much better than expected, that could be a source of support for the euro. We would find that out, we would likely find out the results of the next Italian bond auction during Thursday's London session. So again, during Thursday's London session, I would guess, and don't hold me to this, the times do vary in terms of when bond auction results in Europe are released, but something like 5 a.m. New York time on Thursday. About 5 a.m. New York time on Thursday, give or take maybe 30 minutes, you might see the results of that Italian bond auction hit the markets, and maybe some response on the euro, and even other currencies in response to that. Very possible. So what would a failed bond auction mean? I didn't describe that. Let's give an example. What would mean a failed bond auction? Well, let's say, for example, the Italian government, the Italian Treasury Department chose to sell, $5 billion worth of Italian bonds. So let's say they tried to sell $5 billion, but they only got bids totaling up about $4 billion. So trying to sell $5 billion, for example, could only sell $4 billion. That would be deemed a failed auction, and that could promise some sort of sell-off on the euro. The other event that day, and I'm not sure about the time on this, is probably I'm guessing it would be during the European afternoon, which would mean the New York morning session. There's a vote in the lower house of German Parliament on Thursday on the EFSF. That's the European Financial Stability Facility. That's the rescue fund in Europe, established in May of last year, and originally established to help backstop Europe and potentially other smaller countries like Ireland, for example. Well, some of you may recall that some European officials met in Brussels in this past July and agreed, at least in concept, to expand that rescue fund to I believe they expanded it to a 440 billion euros from its previous number, which I forget what the previous number is. I used to remember that, but I don't remember it in this case. So some European officials, some European leaders agreed in concept to expand that so-called EFSF, the Rescue Fund for Europe. Well, that's great, except now we have parliaments in 17 different Eurozone countries that need to approve that expansion that was agreed to by those European officials in Brussels on July 21st. As I recall hearing just today, about 6 Eurozone countries have agreed to that, including Spain, for example. 6 Eurozone countries have agreed to it. That's all fine and good too, except that the biggest and most important country of all to approve the expansion of the rescue fund, that would be Germany. And Germany's vote on that rescue fund is Thursday. You could argue, and rightfully so, that it's going to cruise through this fine, and Germany is going to approve it, and it's going to be business as usual. Probably right, but I'm telling you, I've heard a lot of resistance amongst the German public, even some resistance amongst some officials in Germany, even some members of parliament about this whole thing. And it's let me put it this way: even if it goes through as expected, I'm guessing more than a few traders will watch for that and trade in accordance with that. In other words, I'm guessing there's going to be some added volatility on Thursday, even if it's just hey, the vote went as expected. Maybe there's some positioning the day before on Wednesday in advance of possibly a surprise failed vote. Again, that's not the base. I don't see that as the base case, but things like this, even though there has an expectation of it going just kind of status quo as is, it could affect the currency market. So stay keen to that. In fact, I'll mention it now. This is another look ahead, even a look farther ahead than just this coming Thursday. The next Thursday brings the next European Central Bank meeting and rate decision. And some of you may have already heard there's already speculation of a rate cut up to like 50 basis points coming from the ECB. Some market speculation about an ECB rate cut. Well, another thing that many of you may already know, and for those of you who don't, is this is worth noting that the current ECB president, Jean-Claude Trichet, next month, October, is his last month as ECB president. And a comment I made a little more than a month ago in our live class at FX Bootcamp is that now, of course, things have changed since then. By many measures, the European sovereign debt situation has gotten worse since more than a month ago. But back then, I said, and I still kind of feel this. I feel inclined to believe this, that I got to be careful about confirmation bias here. But I'll explain that later if some of you have questions about confirmation bias. But I'm still inclined to believe that I guess want to believe that Trichet is not going to deliver, and is not going to end his lengthy tenure as ECB president with a rate cut, essentially undoing the rate hikes that, if anything, he probably pushed through earlier this year. So you see where I'm going with that? Trichet, after leading the ECB to 2 rate hikes earlier this year, some of you may recall the ECB made sort of the same mistake back in 2008. There was a rate hike by the ECB in response to rising inflation measures in the Eurozone. Rate hike was in July of 2008. And what was it, August, September, maybe at most 3 months later, the ECB was joining other major central banks in a coordinated rate cut in response to the Lehman Brothers bankruptcy. So, I gotta think Trichet doesn't want us be seen for making essentially 2 rate hike mistakes in the course of a little more than 3 years, 3 or 4 years. But maybe if push comes to shove and things get nasty enough, then you could see a rate cut from the ECB. Not this coming Thursday, but Thursday after that. But even if there's no change in rates, there's going to be a lot of attention, a lot of eyes and ears pointing towards the ECB and Trichet's last press conference before he winds up his 10 years ECB chief at the end of October. And I've got about 1:35 p.m. New York time, and I'm at a point where I'm open to questions right now. I can think of more things to talk about, and I can talk about those things. In fact, one thing I can bring up is the latest commitment of traders report. Unless there's any questions or comments about anything I've discussed, or even anything I haven't discussed, I can show you the latest data I've seen on the commitment of traders report. Anise, you know what? It's always possible. You know what? Anise, let's take a look at the dollar yen. It's a good question. We'll take a look at that there. Anise, as you may know, we have some new people in power in Japan. New prime minister, actually the former finance minister is now the prime minister in Japan. And in turn, we have a new finance minister in place, leading the Ministry of Finance, which makes the call on interventions to weaken the Japanese yen. One perspective is that maybe the sort of musical chairs in Japan are just it's too recent, and also Japan may be waiting to some degree on how things unfold in Europe. I mean, if things get nastier in Europe, and we see demand for so-called safe haven currencies like the Japanese yen. I mean, the Ministry of Finance, for example, Japan may not want to fight that, may not want to fight the market on that. Another thing to note is this. One of the things historically that have concerned the Ministry of Finance and the Bank of Japan is volatility. An extremely volatile strength in the yen. So I look at the dollar yen, I see a notable drop through much of July, but ever since then, ever since then, the dollar yen's to me anyway, notably quieter. We haven't seen as much volatility. So, from my perspective, it's possible that the Japan's going to sit tight for a while and not intervene. I mean, let's face it, it's been, August? It's been 2 months now. 2 months. So 2 months now since the dollar yen hit the 76.30 zone, which if you zoom out on this chart, you can see we hit that. We hit that level in March before the coordinated intervention involving not just Japan, but multiple central banks back then. And we've been spending nearly 2 months here, and Japan has done nothing. Now, again, part of the reason maybe Japan did nothing is because of the upcoming elections in Japan, and there's obviously some officials in Japan were a little bit distracted right then, right? But you have to say that that time has passed, and the elections that is, and that they've had every opportunity to intervene here, but they've chosen not to. So my best guess is until we see a notable increase in volatility, or unless this pair spends a lot more time around the 76.50 zone than what we already have, then it's probably all. I mean, let me put it this way: I believe we're still on intervention watch. It's still possible. I'm just, I'm even debating in my own mind right now how plausible it is right now, given that you would think that if they're going to do something, even some sort of light intervention, they would have done so by now. I will say from a technical perspective, though, I'll add this from a technical perspective. There's even a recent series of lower highs which have to be disconcerting. But Anise, going back to that price action back in March, I'm guessing it's going to take another wave like that. Maybe not that big, but I'm guessing it's going to take another spike like that before they intervene again. Maybe something taking us down to like 75, 74. That might be what it takes before Japan intervenes again. Having said that, I'm still looking for clues from officials in Japan, especially someone from the Ministry of Finance. If there's some comment in reference to, say, decisive action against on the yen, or decisive action relative to currencies, the Japanese have been fairly reasonable at providing clues or providing hints of intervention before it actually happens. In fact, as I recall, just before this intervention back in March, one official in Japan, I forget who it was now, but the one official in Japan made reference to doing battle with the currency markets. Fairly strong word, and that was like the day or two after that, we get the coordinated intervention. So for clues, you might look for some new and bolder language than what we've heard recently from Japanese officials, and or increased volatility especially in terms of in the direction of yen strength on this pair. Now, I'm not saying that's the right thing to do. I guess one could argue, and rightfully so, that why don't they just simply flood the market with yen once and push this pair up and hope it sticks? Well, here's another question. I'm glad you brought this up because this is something I discussed last week, and I don't know if I mentioned it here. I discussed it last week in our live coaching session, but I don't know if I discussed it here. Compare what Japan has done in like the past year or so with the yen versus what has been done recently by the Swiss National Bank to prevent further appreciation of the Swiss franc. Are you aware of what the Swiss National Bank has done? The Swiss National Bank, let me go to that pair. Actually, the Euro Swissy, that is. And I'm going to go to I'm going to go daily chart. Daily chart should do it. The Swiss National Bank, and let me draw a line, put the line there. Swiss National Bank has essentially declared a floor at 1.20. My horizontal blue line is at about 1.20. Swiss National Bank has declared a line of support that they're going to defend at 1.20 on the Euro Swissy. And yeah, I mean it's I guess you could say it's held thus far. At least the euro Swiss has stayed above that. I mean, I wouldn't call this a rousing victory for the Swiss National Bank. I mean, I'm all but convinced they want the euro Swiss a lot higher than this. In fact, I bet they were hoping for much more movement to the upside on the euro Swiss than what they've gotten thus far since they announced that floor on the euro Swiss more than a couple weeks ago, and actually nearly 3 weeks ago. It's 3 weeks ago tomorrow that they announced that floor. But here's where I'm going with this in reference to Japan. You know, that Swiss National Bank has gone to extremes the Japanese never have when it comes to defending their currency. I mean, you're talking about, I guess to use one analogy, the Swiss National Bank has thrown like everything, including the kitchen sink, even the house, at the market to prevent further appreciation of the Swiss franc. Thus far, Japan has not done that. So from that perspective, you know, it may take a lot more from Japan than just a lingering threat of traditional intervention to prevent further appreciation of Japanese yen. But having said that, I must say though, still, ever since the intervention back in March that I mentioned earlier on the dollar yen, the Japanese yen has been a little bit on the quiet side. And of course, and even since the Swiss National Bank made their announcement a little more than almost 3 weeks ago about the floor at 1.20 on the euro Swiss, ever since then, I would argue the Swiss franc has been quiet as well. So when it comes to safe haven currencies, at the moment, what's left is the dollar. Yeah, Michael, that's the dilemma they face. It's a good question. I don't know. It's a very good question. So far, that hasn't been a concern, but it certainly could be. That is inflation in Switzerland. Got a couple minutes left. I haven't been so good at finishing these sessions on time. That's why I'm getting quiet right now. Getting close to the end of this scheduled end of this webinar, so I want to be respectful of everyone's time, particularly everyone at FX Street who supports us. Folks, have a great evening or day or morning wherever you are. Cheers.